This conference will now be recorded.
Hi everyone, welcome to this another video in Market Up YouTube channel. So it is sometime like 2 months long ago only I just updated. I could not update on this gold 10 crores video for 2 months. So I thought of updating today. After the market hours, I'm sure everybody will be just relaxed now. Lot of volatility, lot of excitement, greed is there in the market. Now it is the time to be cautious. Okay, so this for the sometime like just give an update on what is this. I started this process of making this investment for my son, which is I suggested for my subscribers also like to start something like this for their kids who are done say 15 years, 18 years old, so that they can start their investment account in mutual funds. So they let them not be a trader; they'll be just investor only. So let them invest a very small amount only. If you assume that you are giving some pocket money or some expense, what are 5,000 rupees pocket money or expense, what do you think, whatever it may be, that this amount is what you have to invest every month in the mutual fund, invariable of the what are the market movement. Is it high valuation, low valuation, whatever it may be, you have to still do the investments. So this is what my son's birthday, and I started this investment process for him, and then he's doing this. And you have to keep educating him on how to analyze the market, how to start the investment process, how to manage it, how to not be afraid when the market is going so volatile. Now the market is just around like 12,000 nifty. After say 10 years, maybe it will come 25,000 also. With all these ups and downs, whatever is there, with so much of pessimism, optimism, market will keep on going on the upside only for in the long run. So this is the place where every month you do the investment of 5,000. After that, increase the investment by 10%, 15%. So in 10 years, every 10 years, every 1 year or 10 years, you have to keep increasing the investment by 10, 15%. So 5,750, and then next third year will be 6,613, and so on. So you'll be keep on increasing the investment by 15%, and then after 15 years, then another 10 years, you'll be keep on increasing the investment by 10%. So this way doing this, now currently like once he completed his 18 years of age, we started this. So this by age of 50, at age 50 till 50, you'll be investing almost 50,000 rupees per month. Keep on increasing. This will be keep on increasing. If you see here, 25. We told that 15 years, first 10 years will be 15% increase, then 10 years. So total 20 years only will be keep on increasing. After that, there will be no increase. It will be standard. Let us see here. If you see here, 32,000, 13,000, 40,000, 52,000. You can see here, there's a stagnancy will come here from 30 years. From 18 plus 20 after 30 years, from 30 years till 50 years, we just investing 52,000 only per month, and will be till 50th year. And we are expecting a return of 15% per annum. Okay, so this calculation return is there also, and this is actual investment. You keep on tracking your investment also on monthly basis, and teach him how to he or she, whoever will be, teach him how to track the investments, what are the investments you have to keep it, what kind of mutual funds you have to invest, and that kind of education you should give to your children, so that by age of 50 they'll be coming out with the goal of that. Though the video shows 10 crores, conservatively the goal is 13.4 crores. Assume that you invest 5,000 starting investment. Now we just increase by 500 rupees only. Assume 5,500. This investment, your target goes up by 1 crore actually. And every month also, every year you are increasing 15%. And if you increase to 6,000 rupees, then goal reaches 16 crores. We are just calculating 15% return per annum only. As a monthly basis, I'm just cumulative. Is a linear return what we are calculating, but the market is going to give non-linear returns. Okay, that's what you have to explain them also. It's not like FD where you get monthly return. It is not like FD, you will get monthly return, is what you have to keep your explain your children also while they're investing. Now that say the investment is 50,000 rupees. Now once the goal, when the investment account reaches say 10 lakhs, 20 lakhs, whatever, the movement is going to be very, very huge. Like the crash what we saw on the Mars, if something comes, then the 10 lakhs can go to easily 5 lakhs, 6 lakhs also. Okay, that kind of movement can be there in the market. So we have to do some profit booking also on regular basis in the mutual fund account partially. Whenever the 15%, assume that threshold is once you get 15% return in say 6 months basis. Okay, because we are expecting 15% return. If you get 15% return in less than 1 month, then just book some profit and shift it to government securities. That's what we will be doing. So we'll see. Hope you understood the process, everything. I will just take you through the what are the investments and what is the portfolio now also. So now this is actual investment I'm been tracking. So last 2 months I've been increasing the little the compared to the actual to just ensuring the market is on the up move. After that I'll be shifting the funds to government securities also. So this is the account, investment account. Okay, this is the investment account. So in coin zero has started this, and all these direct funds only. So direct funds gives at least 1.25% more returns than the other funds. Okay, non-direct funds, because here the expense ratio is very less. So what are the mutual funds I've been holding in this? DSP equal Nifty 50 fund. So because of this reliance which is falling will not affect you. The weightage will be 2% for all the stocks equally. Okay, I'm just holding around 10,000 here. And then Prudential Banking Financial Services Fund, Direct Fund, Growth. Everything I'm putting only in Growth Fund, not in Dividend Fund. Okay, so Growth Fund here, another 11,000. And then Prudential Bank, all these financial companies, all finance companies like Muthoot Finance or Manappuram Gold, banks, privates, public, everything will be coming under this. Then DSP Government Securities Fund is another fund where you'll get a very small return only, but definitely in terms of whenever the market is crashing or something, you can shift this fund and to move to other funds where you can get opportunity. So this is not going to grow too much or to fall too much of crash because it's a government securities fund, and you're going to get better than FD. That's what is the expectation. And then next 50 index fund. That's what another one. This is the index fund actually. So index fund you shouldn't bother at all. What are the market, wherever it go, definitely it bounce back. That's the reason. If you see most of the things I put in the index funds. And the next one is a mid cap 150 index fund. Okay, there's another one. And equally, if you see, almost I'm just trying to spread out all the investments equally in the all the funds. And the Nasdaq fund also is there. It is the ETF. So Nasdaq 100 also is the fund of fund. Is doing very good. HBCC 8,000 is there. I'll try to increase it when markets come down. Then Motilal Oswal Nifty Small Cap 250 fund. Okay, there's another one is there. Then near Smart Nifty 100 equal weight fund, same like Nifty, where here also equal distribution happens to all the stocks. Then S&P 500 index fund. There's another one. So we have outside Indian market is S&P 500 and Nasdaq 100. These two things are there. Then Motilal also Nifty Bank Index Fund. So this is like a Nifty piece, what you call it. So Nifty piece like what you can see investment. Just 3 days back, you see the investment here. Just it is 26 October, 23rd November. 3 investments happened. The NA was 8.79. Okay, so here it is good actually compared to the investing in the Nifty piece. The investment can be just minimum 500 rupees also. So you don't feel that no a big pinch or something like one Nifty piece you buy at a higher value. So tracking that will be difficult also. So better you put in mutual fund here, Nifty Bank Index Fund Plan. Whenever the market Nifty Bank does the correction, that time you can buy more here. So this is the list of all the mutual funds I'm holding. So how you can check all the mutual funds which is there available. The website also is there. Okay, also I have booked some profit actually. So that also I'll show you. So this is the profits I booked from starting now till date, around 4,690 rupees something. This is a profit I booked, and this is what I mentioned here, 4,600 roughly. And then here the total unbooked unrealized profit is around 3,500. So this is the another one I mentioned here. The total profit realized and unrealized both is around 8,000, which is 10% roughly. We expected almost 15% per annum, which is a monthly basis. We cannot see 15% 80,000 because we are investing very much slowly. So the profit will be calculated monthly basis. So this the target is that once you complete 50 years of age, all the investment in mutual funds should be shifted to your FD. That's a better thing. If you can manage, no problem, because after certain age, you should not keep your investments in equity because considering the age factor. Normally what they tell is 100 minus the age should be the amount of investment in the equity should be. So as I say 50% should be in the equities, 50% should be in the debt funds. That's the possible. But as a conservative approach investments, we can do what you can do is you can shift 70% to the debt fund and 20% to the equity. That's what it can be done, because after certain age, handling so much of volatility, you can't digest. Okay, we can tell them it is easy, but at that age it has become difficult to digest seeing so much of movements. Even for this small investment of 80,000 rupees with 10,000 government securities, we are seeing a movement of almost 1,500 2,000 rupees. The same it goes to 8 lakh rupees, then the monthly daily movement of profit loss will be around 10 15,000 rupees. Okay, so the kind of volatility, your children need to see the volatility, understand okay how the market moves, why the market moves, what kind of stocks is doing, why the market, what is the valuation, what's P ratio. You have to slowly inculcate the understand knowledge to the children actually. Okay, so this what is the one thing. Then what are the different funds there and how to analyze. So there is a website called there are a lot of websites are there. One of the website is which is like very simple is rupeewest.com. Rupeewest.com. Go to tools, MF screener, you can see all the mutual funds here. Now here you select here large cap. Large cap means you can see any mutual fund with a high rating. You can see first listing of the. That is the first way of seeing it, and also see the what is assets under management. If you see assets under management, almost is 23,000 crores it's managing, and also see the return what it's giving. If you see Axis Blue Chip Fund return, the assets also very high, and also in the last 5 years consistently they've been giving 12% return. So this is what how you have to analyze your list of mutual funds and see. Click this and see what are the list of stocks they're holding. So just click that and go. You can see the portfolio. You can see Infosys, HDFC Bank, Reliance, Bajaj Finance, TCS. These are the stocks which have been holding. Don't try to hold multiple stocks and different mutual funds so that you don't get duplication. Already you are holding so much of stocks, and it is a lot of diversification is there already. So no need to go for too much of diversification. You can compare any stocks also, like compare this one with other mutual fund also. Like I want to check Kotak standard multi-cap fund. I want to check. Okay, you can check here. Okay, this one comparatively, what is the return, what is the minimum investment. So Kotak standard multi-cap fund, if you see here, what is the return they've been giving the last 10 years is same, almost same. If you see, almost same, but in 5 years only the 2% higher return, and here in the 6 months also slightly 4% lower return. Overall, if you see 10 years, they've been both are giving the same return actually. Okay, so it is not a great idea to diversify, say 10,000 here, 5,000 here. No need to do anything like that. Just unwantedly you are diversifying the mutual funds and getting into complication. Try to keep minimum number of funds only and put into large cap, small cap, mid cap, and then some government securities, some index fund. And then once some big correction comes in the pharma or banking sector, something like that, then you can invest in the banking sector fund. And also you can see here Prudential, ICICI Pru banking, which I had taken, no? Banking and financial service fund growth. So if you see this one here, the expense is very high actually. You see, but the return, if you see here, return they give only 9.5% in last 10 years, overall 10 years. Overall, if you see the short term, there is a good return, but in the long term, everybody is giving almost same return only. So when you get some good profit, now once the market looks for any correction or something, like, because if you see my video also, like everything is bullish now. So now if you see anything which is giving more than 10% return, now tomorrow after updation maybe it will come 10% return. So what we can do is then 15% return is a very peak in short term, because this one, if you see, has started in the August. Okay, August starting investment in this. Now it is almost like just 3 months now. 3 months now we are getting 8% return. So what we can do is, since it's a starting stage, there is no need for booking any profits as of now. Once you maybe like reaches say 5 lakhs, 6 lakhs, then we can look for any booking profit at that time. So that's what the mutual fund website, you can just have a look at it. Very simple website to have a look at it. In case you want to see what are the stocks that has been held by the mutual funds, this is another way also you can see. Go to tools, stocks held by mutual funds is what you have to click. Now you can see Reliance Industries. You can click the company name, and you'll get a list of all the stocks that are held by these mutual funds for Reliance Industries. And similarly, what are the stocks that are attracting mutual funds? These are list of stocks. And the selling pressure seen by mutual funds, these are the stocks. So this is how you can see the list of stocks also. And keep a tab on the technology sector, pharma sector, and banking sector. These three mutual funds also you can keep a tab. When there is a correction, good correction, then you can start investing in the sector funds also. That's another way of managing your mutual fund portfolio. Hope you've taken care of all these things. If anybody is following that and from the beginning and started investing and making some progress in the right path for the children, it is not for people. This process of investment in mutual fund is not appropriate for people who are aged above 45 to 50, because already they have completed the majority of their age, and then at this point of time, market is very volatile, and there is no point in making any big return from mutual funds at this point of time. This is purely for your kids who are, say, maybe like if you can have your name and then operate on the behalf of children, and once the children becomes elder or adult, then you can transfer your mutual fund holdings to them. That's why you can do it also, but purely to ensure that your kids are financially literate and make them financial freedom, aim for financial freedom at the age of 50 years, and there is nothing to worry or be afraid of the financial burden. Okay, hope you like the video. Please subscribe, like the channel. I'll be happy to give any new updates on new things which is helpful for you. Thank you.